Kunal, welcome to this conversation. Of course, I don't think we need to really spend a lot of time introducing because most people here follow you on Twitter and they already know what your thoughts are about the wide industry. I want to pick your brain a little bit about the topic, right? The trust and what that means for the broader fintech ecosystem. You're in a situation right now where trust is not something that's very easy to come by. There's obviously challenges in people wanting to share their trust with others, especially companies, especially younger companies like fintechs who are there in the ecosystem. What is it that people are probably missing on both ends, from the customer as well as the service provider side? And what do you think is probably top priority for everybody?
Yeah, that's a deeper question to reflect on. First of all, we have to understand that any and all businesses that deal with money is a business of trust. No matter if you are taking deposits or lending, doesn't matter what side of the equation you are. Are you in insurance? Are you in wealth? Doesn't matter. You are in the business of trust. Trust comes from a combination of four things. Presence of all four may not be needed for you to be trusted, but visible absence of any one of these four is likely to cause mistrust in you. One is consistency. Second is competence. Third is benevolence. And fourth is integrity, right? You may not need to have all four. Visible absence of one will make you be mistrusted. And I think when companies, especially fintechs, the thing that they don't have enough towards them is let's say they are not licensed like banks where there is a larger institution supporting them. They are not coming from a vintage of a global MNC that can necessarily say that, oh, we are this monstrous company that is behind this. They are a lot of innovators who are trying to find their space in this ecosystem. And the truth is that when you're fighting against all of this, trying to make your presence, you try to get desperate. Earlier, Bijit talked about how people kind of take the wrong ways and all of that stuff. And that not only hurts that individual company, it hurts the entire ecosystem because everything is kind of painted into the word fintech.
We've got, multiple sort of issues which are panning up. I'd written down hidden charges is a big one, right? Usurious interest cost. You've got loan stacking where excess leverage is built. Then on top of that, you've got fraud by a bunch of players where none of us have any control over. How much of this can be actually handled by companies?
Yeah, I think you can't wake up one day and say I'm a bank, but you can wake up one day and say I'm fintech, which exposes the ecosystem to the kind of elements that may not have the same long-term mindset. I have been in the fintech ecosystem for a little over 16 years. The word fintech did not exist at that point of time. It's a more recent phenomenon, but I think just being in the ecosystem and kind of playing to, and thinking, having an institution mindset that you want to build a company that will outlast you, you will make very, very different choices. But I think many companies are kind of doing many of these things to just survive. Maybe there is no role and room for so many players to exist. We made the sector very, very hot, but we have not found a structural way for all of these to exist. And what kind of business? How should they monetize? What are the business models, right? I think unless we create a structural way right from the top on how should these companies monetize, what are the guardrails that they should be operating, and potentially even get them under some licensing umbrella so that they're at least regulated in a structured way to do that, I think it's going to be harder and harder. Coming to some of these shortcuts that people take, right? Hidden charges, usurious rates. I think nobody does that with the intent to just kind of ruin the customer's happiness. I think the intent is to survive on their own, right? And I think a lot of time these things kind of expand further when consumers, like 90-95% of the customers probably are entering the credit ecosystem for the first time in their entire family in a formal way, right? Everybody has probably taken some informal credit through friends and family and all of that. And many of them don't understand. For example, we've seen at Cred that when we started Cred, we used to survey affluent customers who've had credit card for 7, 8, 10 years and multiple credit cards, probably even making 1 crore of salary. And we would ask them that, so what do you think is the interest rate on credit cards? And they would say 15%, right? We would tell them that, hey, what happens if you don't pay your bill in full? Well, no late fees. When COVID happened, there was a moratorium announced. We sent an email to every single consumer to not opt for it because it may not impact your credit score, but it will impact your interest thing. So I think we are in a very, very nascent stage of, and India also culturally does not discuss money on the dining table, right? It is a big taboo topic, and therefore even frauds are barely reported. My strong conviction is that less than 5 or 10% of frauds are reported.
10%.
Yeah, because what happens is it's a shame to you, right? Let's say somebody schemed you with some FedEx scam or something of that nature and you lost a few lakh rupees. Telling this to people does not give you status. It takes away your status, like, because most people are going to say, what kind of an idiot person you are to do something like this. So I think what's happening is that we are entering an ecosystem, and now with AI, many of these things kind of accelerate further. I think if we really want to build a robust ecosystem where we have to understand one thing: we cannot be long on India without being long on credit.
I want to touch upon all of these topics one by one. So first, let me come to the question of innovation and in a low trust sort of ecosystem. Now, every time we talk about innovation, while there is a lot of praise for innovation, there is a segment of people who look at it with a little bit of suspicion, with a little bit of doubt, saying that, is this good, right? To bring back trust, shouldn't that be, or creating something that is trustworthy, shouldn't that be an incentive to ensure that innovation doesn't suffer going ahead?
Yeah, I think that's what I meant by maybe it's a good idea to kind of regulate more than less, because it ensures that you understand what clearly right and wrong means, and you are subjected to frequent audits. And when you scale, you realize what are the rules of the game, right? And it may stifle innovation because you will say, oh, only if you are licensed, you'll be able to participate in the ecosystem. You can have tiered regulation for that, right? And for example, NBFCs do already have that tiered regulation where as you change in your book size, the amount of regulation is very tighter, right? So, and I think that's the right format to deal with. But when it comes to the understanding of fintech, you have to understand that unless technology reaches every single Indian, and there is no way physical infrastructure, branches, other things are going to get the same level of scale. The success of UPI is a great example of that, right? Imagining, it's not like a decade ago also, imagining that we will have 500 million people using a digital ecosystem to make payments and say no to cash. Very, very hard to imagine. And we are forgetting one more thing, that every household in India has a chief technology officer. Yeah. The person happens to be between the age group of 5 to 20, right? And they are coming very quickly to the workforce and very quickly going to become the chief procurement officer of the household as well, right? And these consumers do not want to deal with people. Many of you who have kids, you realize that your kids hate speaking on the phone, right? They'll say, text kar do. And imagine trying to cross-sell on a phone to these customers, right? Imagine trying to really make these consumers feel that, you need to come to the branch and sign this document, all of that. So I think they are already taking the path of least resistance, and fintech is the path of least resistance. And I think we need to find a way to structurally incentivize that. One thing we should not forget, that it will only work through a great partnership between the banking and fintech ecosystem. 5 years ago, it was a big question that can they coexist? I think that question is not being asked anymore. Every fintech has deeply partnered with banks, and many, many banks have benefited through these partnerships. Yeah. So I think it's just about finding this beautiful balance and ensuring that we are making the whole system more efficient. One last thought to think about is that today, if you look at many ecosystems where credit took off, was where responsible credit just did not impact your life in credit, but also impacted your life in general. For example, it is impossible to rent an apartment in the US without a good credit score, right? And therefore, everybody obsesses about improving their credit score consistently, right? How many Indians know their credit score, think about their credit score, or care about their credit score, right? I mean, the moment I say something like that, we say, oh my God, are we talking about Chinese ecosystem and all that? That's not the point. How do you make people kind of see the positive benefit of it? For example, I'm just giving a random recommendation,
Sure.
but what if DigiYatra was allowed specifically for high credit users first and the ones after that? I'm just saying that, can you bring that into the mainstream conversation, make people responsible about their credit score? It sounds absolutely crazy, but in many countries like China, Japan, dating apps have credit score in it. Now we will say, how can this be making any sense? But why shouldn't it make sense? I think the moment we start caring about these things, automatically it will become part of our everyday conversation and people will be responsible about it and they will not do risky behavior with it, right? Today we have to understand that a large chunk of credit is done by largely male consumers and their credit behavior is not known to their entire family and they may be using that credit that they have taken to behaviors that are more speculative in nature, which causes the risk to go up, right? But credit going towards consumption kind of drives the economy forward, and we need to encourage that, right? It may sound absolutely crazy, but there is an income tax incentive for using credit cards in South Korea, right? Now, this sounds absurd to our mind, but we have to understand that there is a playbook that the world has adopted to A, grow per capita income, grow credit consumption, and drive the economy through credit.
I want to touch upon that credit score point that you made, right? Maybe change the way that we're thinking about, or start thinking more about credit score. But I think the core issue with that is that vast majority of people do have no idea how the hell this credit score is actually derived. The system of arriving at a specific number is pretty opaque. And if your number is not that great, I don't know what I need to do in, say, 5 years to bring that up. Then the trust question comes up again. How would you address it?
I think it's a great point that you're making. A lot of scams happen in trying to hope to improve your credit score. Like it's an interesting phenomena that you don't know how it works, and because you don't know how to work, there are pundits who out there who try to give you some I don't know, magical pill that will help you get your scores up and your limits up and so on and so forth, and sometimes even encourage you to do behaviors actually might be negatively impacting your score even further. I think culturally we need to make this conversation a lot more mainstream, right? Let's take a different example. A reality show like Shark Tank made entrepreneurship a topic of every household, right? And I would have not imagined that to happen, that people would talk about these things. What I don't like about that is everybody thinks that entrepreneurship without raising money, which is not true. It's like saying that running is not possible without Nike shoes. It doesn't work the same way, right? But the thing is that it actually made running a conversation in the household. So what I'm trying to say is that we need to bring credit as a mainstream conversation, make people talk about it, and make people realize that it's not something that is considered to be a bad behavior. Because unless we make this normalized, we will consistently see people do bad behavior because they've not been advised in many, many ways. If you look at the fraud situation also, right, while we have strengthened ecosystem, done audits, all of that, if you just meet anybody from cybercrime, they'll tell you 99% of fraud is done by human mistake. I gave my OTP, I gave to somebody, somebody called me, I downloaded an app, I fell for some digital arrest, all of that stuff. So that's like we've made all the hardware solid, but the software that is us is still weak and exposed. So I think we need to kind of really think about how do we bring this into school, colleges, make this mandatory for a lot of people to learn and really make it mainstream. Because another thing that I learned from the cybercrime team, that majority of people who fall for frauds actually come from the IT ecosystem. They're working in IT. So you would say that, oh my God, it must be some older people and other people. It's like people who are actually working in this ecosystem. And the cybercrime team told me that this is the half knowledge problem. They think they know something. Sometimes when you don't know things, you're sometimes more protected. Like, I don't know how to download APK. I don't know how to deal with this digital Zoom call something. It's just very fascinating that we need to kind of make these conversations mainstream and make people realize that what is bad for them.
Yeah.
And then automatically the system will start cleansing itself.
I want to touch upon your one statement that you made, which was you can't be long on India without being long on credit, right? We are, relatively still fairly young in the consumer credit game, so to say. Should access be that easy? Because it also prompts bad behavior or irresponsible behavior from the borrower's end.
I think this is a classic thing that our default setting is to say, just the way we think about raising kids, right? No, you will stay at home. Like, because we can't give proper guidance, the default setting is no, you're not going out anywhere. But I think that stops the development. It's about who do you go out with, what are the rules of going out, and so on and so forth. The question is that if we made things seamless, there should be guardrails around how it is consumed, right? Let's say if we had a good sense of how the end use works, it actually drives the economy forward. But let's say if we are not able to control the end use and that capital goes to some irresponsible credit behavior, right? We are not only risking the individual, we're risking the entire ecosystem and the lenders who are participating with these customers. Today, we have observed and we have discussed that with banks, for example. We all know about the impact of F&O and how it has a lot of people losing money, but very few lenders made the connection of who is using F&O and a connection to lending. And I think that becomes a very tricky situation because there is, for example, F&O transactions are not possible in account aggregator, right? We get mutual funds and stocks, but not F&O transactions. And I think that's where it will evolve. More and more things will kind of get visible and lenders will get stronger about how to underwrite, because otherwise you thought, oh, demand entry is all positive, but it may not be all positive, right? So I think it's about thinking about taking every mistake, making the system more robust, but not kind of realize, if we go back and regress, and then we will kind of, it's a little bit of it takes longer to bring it down and longer to bring it back again also. So I think we need to just kind of be more careful about how do we put these constraints versus kind of take the extreme measure of saying that, oh, let's make sure it is not easy. Because it's a little bit like UPI, right? If UPI seamlessly encourages transactions that you should not be doing, should we think about, so, oh my God, let's do one thing, let's put some more friction in UPI. I don't think we'll think about that.
I want to touch upon this responsible credit term because it seems a bit nebulous out there. In an environment when advertising and marketing is focused towards buy your biryani for 3 installments, right? It just seems like you're expecting something from somebody without giving them the tools for it. How do you deal with that?
Yeah, I think I haven't seen the biryani ad, but that's an interesting dimension if it's unlocked. I am personally a product of a bad credit behavior. My family went through absolute bankruptcy when I was 14, 15. We had to sell everything that we had to pay off loans. I had to start my career as a delivery boy and a data entry operator when I was 15. And I've been working since then. And I think one of the stronger incentives of starting Cred was to kind of constantly encourage good financial behavior without having this thing of, oh, credit is bad, right? Because it's like saying that, oh, don't touch the knife because it cuts you, but it makes your life so much better. So I think the question is that how do you kind of make it easy to manage? I think every time when people find shortcuts to do things and not play long-term games, they will always do some harm to themselves and to the consumers as well, right? The key point I'm making is that today, many fintechs are struggling to have a viable business model, and many of them are taking shortcuts. And maybe there is no room for so many of the players to exist because the earlier panel talked about differentiation. Where is the differentiation? How do you bring the differentiation? Where is the audience where is the per capita income growth for you to say, I'm going to expand the market, right? There is a direct correlation of number of people who pay income tax and number of people who are getting unsecured credit. That's not changed for the last 10 years or last 15 years. By expanding the pool doesn't make it easy. Like say we are giving merchants some lending through UPI and all of that, but can we really scale that to millions of merchants? The truth remains that we will always have a certain growth rate on the way we can increase the consumer pool. We need to find ways to make it easy to participate. and also make people realize that if they do bad behavior, has a long-term implication to that behavior. I meet so many people who are younger and they're like, oh, I just did that and I did not pay and all that stuff. And I'm like, do you understand what is the long-term impact of that? I don't think this conversation is real for them. It's something that doesn't exist in their life. Hypothetically speaking, what if people did not employ people with bad credit score? It already happens in banks. What if this became normal? Would people become irresponsible about these things or start getting more careful and therefore be very mindful about how they use credit?
Still a majority of the, or no, well, not a majority, but a large part of the customer acquisition seems to be new to credit, where the score doesn't exist, right? Let me get to the other point.
Actually, that may not be true. If you look at the book that every fintech is doing, it's largely, when it comes to value, it comes to customers who already have credit history versus new to credit. The new to credit phenomena happened a few years ago. It doesn't exist anymore.
Okay. Let me come to the AI question here. Now, and before that, I want to touch upon underwriting as a concept, right? Like you've got this thing that the RBI is very against, which is algorithmic underwriting. And they say that, without a person being behind that decision doesn't seem to be very sound. A machine can't decide for itself. Could that change going ahead? Does it need to change?
Yeah, I think we need to first understand algorithmic AI. These are nothing but training models. Today, if you look at, every lender will have some policy and some risk guidelines that they follow, right? And even when a person is there, they follow the same rule book through which they approve or not approve a loan, right? So saying that replacing human beings versus making human beings significantly more efficient. So let me paint a new picture for you. Sure. What if a CRO AI bot is the one who evaluates every single loan application? And this CRO bot has been 100% trained through the CRO themselves, and they have all the rules and everything that they're doing, and they are actually trained through that perspective. Now, this is where it gets very, very interesting. The intent is to say, do not become so reliant on technology that you do not see the signals and stressors, and you are already too late to observe these things. That's the guidance over there. But I think we need to encourage the use of technology versus encourage the idea of replacing human beings. I don't think that is ever going to happen. Using technology, using AI, using other things, we'll only get humans to become significantly more efficient in doing things that they are already doing. It's a little bit like saying that AI is going to replace journalists. I'm sure you guys laugh at this topic all the time.
Not anymore, honestly.
Okay, but let me ask a different question. Has it made journalists significantly more efficient?
Yes.
The idea is that productivity is the metric that we need to really chase. India, the largest employer of India is inefficiency, and we need to address that.
Okay. One criticism of that is that this mindset of chasing productivity takes away from the nicer, finer things in life, which we, in the inefficiency, do enjoy currently. But does that worry you at all?
Yeah, see, this is a very interesting problem, right? We can't have multiple metrics for the country to chase. Either we say we're going to be prosperous, and if you have to be prosperous, you have to value time. Sure. I don't know any country that is prosperous that does not value time. Right? And if you want the life to be finer and peaceful and soulful, you do not have to value time. For example, you will see a very clear pattern. All the places that you love going to vacation to does not value time. And you feel significantly more peaceful over there. Right? So the question is that, what metric is more important? Do we want prosperity for the country? Are we okay with this per capita income? Are we okay with poor healthcare? Are we okay with many of these things on education? Are we okay with many of the jobs supported through government schemes versus people becoming independent on their own? I think we need to be very clear about this thing. I think India's biggest problem is that we remain confused about these things, right? The whole debate about how many hours you should be working, the question is that it depends on your ambition in life, right? India supports all the things. We talk about how many hours, but we don't talk about that we also have 5 days a week and lots of holidays and all the festivals and everything. Many of these things don't exist.
But is 90 hours the target then?
No, the question is, what is your ambition? Why don't we talk about what is the ambition? I have never seen any conversation saying that what should be your net worth be, what your income should be, how well should be your family be, in what condition, should they get extraordinary healthcare or not. I don't think the conversation about hours, it's about having these very clear goals.
The one question I wanted to ask you is, to your mind, in the current setup that we're in, and you're also growing your own business on one side and looking at some of your colleagues and peers on the other side, what do you think is the one challenge that everybody's missing out on?
One challenge everybody's missing out on means they're not building.
They're not caring enough.
Building systems, building companies, and that become institutions. Everybody is trying to survive the next year, next quarter. Very few people are thinking, how will we build institutions that will outlast us? And I think when the moment you take that mindset, many choices become easier.